Good morning, good evening, good whatever time it is you're watching this. I'm Dave with Cups and Handles, and in this quick market recap, we're going to break down today's SPY price action, identify the key technical levels that matter, and discuss what I'm anticipating for the next trading session. We only have a few minutes, so let's jump right into the charts. Hello everybody, welcome to today's recap and analysis video. It's going to be a very short one. I'm not feeling very well, so let's go ahead and jump right into it. So we're going to hop to the daily time frame really quick, and I just want to show that basically today we closed right on top of the daily 5 or the 5-day moving average, which is at the 740.89. We closed at the 740.86, so 3 cents off. And what's important about this is that this is a very neutral close. Now we're going to go ahead and hide the moving averages here, hop over to the hourly time frame so we can kind of go over the day. Now, really what happened is that, and pulling up the drawings, we did have this head and shoulders that was playing out, and it decided to reject off of the support range. And that support range again is at the 735.72. Now, obviously we didn't head down there all the way during the intraday. We headed down towards the 735.98, but if you've heard my videos before, usually the support range is not exactly to the penny. Even though that's what we track, it's going to be that area. So this is telling us that the market wanted a very neutral close. We closed at that 5-day moving average, and that 5-day moving average, as always, is our nearest support. Okay, if we're going to have a bounce or a breakdown, that's always kind of the range you want to close at, because the next day we have the ability to either push upward or head downward. Now, with that said, we do have the FOMC tomorrow. Okay, and I'm going to kind of back up a little bit. In the overnight, we saw this pretty large candle to the upside, and as you can see with this major selling channel, it still rejected that selling channel. Okay, almost to the penny again. Alright, basically right at the top of this channel. Now, this channel again has been holding very strong for the last 2 weeks, 3 weeks, something like that. And every single time we get to the top of it, we find a rejection. And I think that's, obviously staying true. Um, the overnight was up almost 0.35%. At one point it was up 0.44%, and now it's actually negative in the overnight, which is largely attributed to some of the Asian markets. They've been experiencing a very large sell-off, and we did talk about that. There is the tightening margin requirements in South Korea right now, so very likely a lot of firms are trying to posture for that. So with that, hitting the top resistance of this selling channel with bouncing off the bottom support in here, this is telling us kind of two things, or one thing, that the market is postured for the FOMC tomorrow, and that's kind of what I was wanting to lead into. Now, with the FOMC tomorrow, the odds are, again, they're not skewed in any one favor. Okay, it's not 50-50, but currently it's about 70-30, and let's go ahead and swap over to that really quick. Trading is a skill that can last for a lifetime. Join my Patreon for live classes, my personal market analysis, premium Discord access, and direct communication with me. Invest in yourself, become a more consistent trader, and build a better future for yourself and your family. Visit patreon.com/wooksy to join today. Thank you so much, and let's return back to the video. So as you can see, we have the odds of a pause, basically maintaining the current monetary policy at essentially 70%, and the chance of a rate hike, increasing the monetary policy, is almost, 31% chance, currently a little over 30% chance, which is very indecisive. We've talked about this multiple times, but the markets usually don't price in their rate decisions like that. Usually it'd be like a 90-10, even like a 95-98% chance leaning one direction. this is kind of out of the norm, which means that there is a lot of money postured on that rate hike. Okay. Even if the overall odds are still heavily in favor of the hold slash pause, there's still a lot of money on that rate hike. Okay. So if we do get the rate hike, I would expect pretty much a bloodbath tomorrow. I would expect selling to happen and push even below this selling channel. Um, that's how much I think the market would just be kind of flabbergasted and overwhelmed by that rate hike. Now, with the pause, I still expect selling, and this is kind of why. I expect the pause to occur, but I expect it to be a hawkish pause, meaning that when, um, you know, Fed Chair Warsh decides to give the press conference 30 minutes after the interest rate decision is released, it's very likely going to be a very hawkish speech, meaning that, oh, we still have, one or two hikes on the table this year, blah, blah, blah. A lot of hawkish language. And that hawkish language is really going to set the market into a selling posture. Now, what I'm looking for structurally is that with us rejecting that range in the selling channel here, is that potentially we can start forming a head and shoulders. And very likely that's what we're going to see tomorrow. We're very likely going to be seeing a lot of kind of chop in this range, even in the pre-market. And then when the rate decision is actually decided upon, the drop downward. Okay, we've been testing this 735, 72, basically for, all week plus a little bit of last week as well. So each time we test this range, you can see that the buyers are getting weaker and weaker and weaker. So if that continues, then pull down, weaker buyers, and then eventually break through that support. Okay. Now I do want to head back to the daily time frame really quick because I do want to look at where the lower Bollinger's at. Now currently the lower Bollinger is basically in the same spot as yesterday. It's at that the 736.43. Now it has pulled down very, very slightly because I do remember it was a little closer to that the 737 range. If I remember correctly, it was like the 736, 80 something. So it was very close to that 737, right? If we get the pull downward tomorrow, we will secure that day one lower Bollinger. Okay, which means that we should be closing below that range. Well, again, going back to the 1 hour time frame, pulling up our drawings, turning off the Bollingers, what would closing below that range mean? It would mean that we're going to break that support. Okay, we'll be closing essentially underneath that range. And that's my real expectation tomorrow. I don't really expect the market to see the pause as a bullish thing. I think tomorrow's kind of going to be the day where we either have a bearish day or a very, very, very bearish day. I know that's not the best outlook. However, on the upside, if we do see the market, take that as good news, and if the speech from Kevin Warsh is, not so bad, then this can turn into a cup, okay? And then we could start looking towards that 746.40, okay? And I know many have been eyeballing that range, but this selling channel has just been extremely strong. And what this really is an algorithmic channel. This is basically where the algorithms are trading within, and this is continuing to show that the gamma is pushing downward. Okay, if the gamma is pushing downward, the machines are going to be trying to sell downward. And currently that's what we're seeing. So until we see that gamma shift to the upside, this is still going to be a persistent selling channel. So overall, I am pretty bearish for tomorrow. I have been pretty much loading up on SQQQ calls, which are basically like tech puts for September 18th. and I fully anticipate for us to continue heading downward. But again, as always, if we do head upward, we will identify a buying channel, and in tomorrow's video, we'll, you know, talk about that. And if we do start heading upward again, we have to contend with this very, very strong resistance range. And just very quickly going over that, every time we've hit that resistance range, we've had massive, massive, massive selling. Now, the selling we've seen over the last 3 weeks has actually been pretty tame compared to the selling that we've seen each time we've hit that range. So, potentially, we're getting ready to start ramping that up. Okay. Now, one thing that I do want to really quickly or talk about with the FOMC tomorrow is that yes, I do expect a pause. Yes, I do expect hawkish language from the Fed. But circling back to last FOMC and the last meeting minutes from that meeting itself, the Fed themselves have basically said that monetary policy and then interest rates have remained essentially unchanged, even with this Iranian conflict. That the economy, even though they say is stable, we've been getting a super, super weak CPI reading. We've been seeing the labor market data coming in extremely, extremely cool, which is weak. Weak labor market data plus a very, very, very weak CPI. You cannot be hiking into that. Now, the Fed always has the opportunity to do that. And if they really want to try to step things up and really take a hammer to the economy, they absolutely can. They have the power to do so, but I think it's unwarranted at this point. And not only is it unwarranted at this point, besides the data saying that we shouldn't be receiving that, is that Kevin Warsh is, Trump's pick. And Trump has been saying over the last 2 weeks that he expects rate cuts. Okay, he expects rate cuts. He expects rate cuts. Um, no, we're not going to be cutting rates anytime soon, but you don't hike and then start cutting rates after. Okay, that's just not how monetary policy works. Generally, you're going to maintain that pause as inflation, and the neutral rate starts pulling back to what's expected, and then you start cutting. Okay, so it's not like you hike and then start cutting immediately after. Um, that just never works out. Historically, that's never worked out very well. And I don't expect the Fed to be foolish enough to try to do that. So, am I expecting a rate hike tomorrow? I think the odds are almost zero. Um, However, the market is not saying it's almost zero. And the reason why the market's not saying it's almost zero is because we have an extremely elevated dollar right now. We have extremely elevated oil prices, which have been pulling down over the last couple of weeks. Okay, and let's kind of just go the daily time frame here. Ignore this cup and handle. But since the high back in, um, May 18th, okay, we've been seeing oil prices pretty much faltering. Okay, yes, they've pulled up a little bit since the conflict has kind of restarted. However, they're starting to pull back down again. The USO was all the way back up to 142. Now it's currently at the 120, 125 range. So, is this inflation? No, I don't think so. I think it's very transitory. It's very momentary, basically. And you don't really hike into transitory inflation. Um, it's something that the Fed and the Treasury has been talking about for years and years and years. That's not something you do. So I think that with the Fed having pretty much all the same chairs that they've had over the last few years, I feel like we're not going to be seeing that hike. And based off of the CPI data, the PPI data, and very likely the PCE data this Friday or Thursday, whenever it comes out, I have to double check. Let's see here. It comes out Thursday. Um, very likely that's going to come in cooler as well. So that's not something you hike into. So the market is seeing higher dollar, higher oil, higher treasury yields. Oh, that means we need to hike the monetary policy. However, they're kind of just glancing over and ignoring that the economic conditions are not present for that as well. It's not like we're having a hotter labor market. We're not having a higher CPI or anything else to support that. Okay, so my targets for tomorrow are going to be that 746.40 if we do see major bullishness. However, I'm really expecting the breakdown basically to that 731.95. Um, we may not get that full breakdown tomorrow, but I do expect us to close underneath that 735, and very likely break these two prior support ranges and start working on that 731.95. So that's tonight's video. I hope everybody has a great evening, great day. Have a good trading day. Thanks for watching. If you could leave a comment, a like, share the video, anything that helps my channel out. Shameless promotion, but still trying to grow it. But thank you so much for watching and take care, everybody. And I'll talk to you tomorrow. I'm not going to be able to stream tomorrow, but I will try to stream the FOMC. Can't guarantee it, but it is something I'm going to try to do. So take care, everybody. Thank you so much for watching. That wraps up this market recap. If you found the analysis helpful, please take a moment to like the video, leave a comment, subscribe to the channel, and share it with someone who would benefit from these daily market breakdowns. It really does help support the channel and allows me to continue creating free educational content for everybody. As always, have a trading plan before you enter a position, manage your risk, and remember, we're not trying to predict the market, we're trying to prepare for it. Thank you all for watching, and I'll see you in the next one.